Hi, my name is Adam Clavelle, and this is my analysis for mutual funds. Alright, for starters, I started with domestic funds, and then international, and then sector. For my domestic funds, I chose Fidelity Trend Fund and Fidelity Growth Discovery Fund. And so, first thing I looked at was honestly this turnover rate. I look at it as it's being too actively traded for a domestic fund, at least. So it's going to be really heavily taxed. So it's kind of a Debbie Downer for me. Expense ratios. The expense ratio, in comparison to the other one, the expense ratio is not that much different. I mean, it's literally 0.1 away from this one. But this one's going to be taxed more, so I feel like you're going to be paying more for, pretty much the same returns, right? Am I right? Same returns. This one's probably going to get taxed more because it's got this 128% turnover rate. I mean, it's just that's just something to point out. So then we're going to go to the international funds. I chose Fidelity Worldwide Fund, and I chose Fidelity International Capital Appreciation Fund. And I'm gonna just point something out. All of these four, domestic and international, which depend on countries, I just decided to get the same ratings, like two of them with the same ratings, and analyzing them, because not everybody's gonna analyze them. They're just gonna look at the ratings, and same for this one. And for these, these sector funds, because they're sector related. I didn't really go off of overall rating because I just didn't feel like it was accurate enough. So I went off of, honestly, I really just went off of two funds that move with the market with these, but I'll get to these. So we're gonna go to Worldwide Fund right quick. And first of all, we're gonna have a lower expense rate. Excuse me. We're gonna have a lower expense ratio than the international capital. We are also going to wind up paying more for this fund with this turnover rate, which it's not too much higher, but I mean it is higher. Different returns, and we are also going to look at the risk for this one. So we're going to go to risk right quick, and we're going to find out that we're relatively the same risk with these two funds, and they both move with the market pretty much. I mean, one moves a little more, but they're relatively the same risk, and they both move with the market, which is I'm comfortable with that. So finally, we're gonna have the sector funds. I didn't really, like I said, I didn't really worry about the category rating or the overall ratings with these stars. They don't tell me anything. There's no numbers in that. So I did the Fidelity Select Technology portfolio and the BlackRock Technology Opportunities Fund. Investors A shares. I don't really know what investor A shares means, but so for starters, we got Fidelity Select Technology, and the expense ratio to returns ratio is going to be, I believe, better for this one because we have the expense ratio of 0.75, and we have an expense ratio on this one of 1.42. So that's pretty much double the expense ratio for not double the returns. See, there's only like a 30% difference in returns right here, and right here, or excuse me, there's only about a 30% difference between returns and about a half, or excuse me, double the expenses. So if you caught what I said there, double the expenses and 30% of the 30% of the return difference. So I feel like this one is going to be the better one in regards to returns. It's just that proportionately is going to be better. All right, thank you.